Welcome, savvy investors. If you've ever dreamed of achieving financial freedom, you're in the right place. Today, we're diving into the top 5 investments that can pave your way to financial success in 2024. But before we jump in, make sure to subscribe, hit the bell icon, and give this video a thumbs up. Now, let's get started. Financial freedom is a goal that many aspire to achieve, and in 2024, the landscape of investment opportunities is vast. Smart and informed investment decisions can pave the way towards financial independence. Here are 5 investments that can potentially help you reach your financial goals in the coming year. Number 1. Index funds. Diversification made easy. Investing in index funds stands as a fundamental strategy for individuals looking to steadily accumulate wealth over time. These funds operate by closely tracking the performance of a particular market index, such as the S&P 500. The allure of index funds lies in their ability to provide investors with exposure to a diversified portfolio of stocks, all without the necessity of delving into the complexities of individual stock selection. One of the key advantages of index funds is their cost-effectiveness. The fees associated with managing these funds are notably lower compared to actively managed funds, making them an economical choice for investors. This cost efficiency becomes even more appealing when considering the long-term nature of wealth accumulation. Beyond their economic advantages, index funds have a well-documented history of delivering robust performance. The mirroring of market indices allows investors to ride the waves of overall market growth, thus potentially yielding stable and reliable returns. This aspect is particularly attractive to individuals who prioritize a conservative and hands-off approach to investing, as it eliminates the need for constant monitoring and adjustment that can be associated with more active investment strategies. Number 2. Real estate. Building wealth brick by brick. Real estate, over the course of time, has emerged as a tried-and-true avenue for accumulating substantial wealth. Unlike other investment options, real estate offers tangible assets that can withstand the test of time. When delving into the realm of real estate investments, a meticulous approach is not just recommended but essential. The geographical location of a property stands out as a critical factor in real estate investment. A strategic location can significantly impact a property's value and its potential for appreciation over time. Proximity to amenities, transportation hubs, educational institutions, and overall neighborhood development are key considerations. A thorough analysis of these factors helps investors make informed decisions, ensuring that their real estate investments are poised for long-term success. Beyond location, the condition of the property plays a pivotal role. Dilapidated structures might require substantial renovations, impacting the overall return on investment. On the other hand, well-maintained properties often present a more attractive and potentially lucrative investment. Understanding the state of the property and estimating the costs associated with any necessary improvements is crucial for making sound investment decisions. The potential for rental income adds an additional layer of complexity and opportunity to real estate investments. Investors must assess the local rental market, demand for housing, and the potential rental income that a property can generate. A well-managed rental property can serve as a consistent source of passive income, further enhancing the overall appeal of real estate as an investment class. The stability of the real estate market itself is a significant draw for investors. While it may experience fluctuations, real estate has historically shown resilience over the long term. Property values tend to appreciate, providing investors with the potential for capital gains. Number 3. Bonds. Balancing risk and reward. In the intricate tapestry of investment options, bonds emerge as a steady and conservative thread, offering investors a nuanced avenue to balance risk and reward. Unlike the dynamic and often volatile nature of the stock market, bonds represent a form of debt investment where investors essentially act as lenders to either corporations or governmental entities. This financial arrangement, rooted in the lending and borrowing framework, underpins the unique dynamics of bond investments. The fundamental principle of bonds involves the issuance of debt by an entity, be it a corporation or a government, seeking financial capital. As an investor, purchasing a bond means extending a loan to the issuer. In return for this financial support, the investor receives periodic interest payments over the lifespan of the bond. This interest, often referred to as the bond yield, provides a predictable stream of income for the investor, distinguishing bonds from the more unpredictable returns associated with stocks. While bonds are acknowledged for their relatively lower potential returns compared to stocks, they are concurrently perceived as a less risky asset class. This is primarily attributed to the contractual nature of bond agreements. The issuer is obligated to repay the principal amount at the bond's maturity, offering a level of capital preservation that is absent in the stock market. Integrating bonds into an investment portfolio serves as a strategic move to manage risk exposure. The inverse relationship between bond prices and interest rates further enhances their role in a diversified portfolio. When interest rates rise, bond prices tend to fall, and vice versa. This dynamic interaction allows bonds to act as a counterbalance to the volatility of the stock market. During periods of economic uncertainty or market fluctuations, the stability provided by bonds can serve as a cushion, mitigating the overall risk exposure of the portfolio. Number 4. Peer-to-peer lending. Earn higher returns with caution. Peer-to-peer lending platforms have swiftly risen as an alternative investment avenue, enabling individuals to directly lend money to other individuals or businesses, potentially yielding higher returns than traditional savings accounts. This alternative financial model leverages technology to connect borrowers with lenders, circumventing traditional financial intermediaries. Despite the allure of increased returns, caution is paramount in the realm of peer-to-peer lending. Investors are advised to conduct rigorous due diligence, meticulously vetting potential borrowers and comprehensively understanding the associated risks. The absence of regulatory oversight and the potential for defaults on loans accentuate the importance of thorough research. While peer-to-peer lending introduces a novel dimension to investment strategies, its success hinges on prudent decision-making and risk management. A careful approach, grounded in informed choices, is crucial for investors seeking to harness the potential benefits of higher returns within the dynamic landscape of peer-to-peer lending platforms. Number 5. Commodities. Navigating volatility for potential returns. Commodities, including gold, silver, and oil, present tangible assets offering a hedge against inflation and economic uncertainties. Despite their inherent volatility, commodities wield the potential for substantial returns. Integrating commodities into an investment portfolio introduces diversification, acting as a counterbalance to traditional financial assets. Gold, often viewed as a safe haven, can shield against currency devaluation, while oil may capitalize on global demand shifts. While the commodity market can be unpredictable, strategically navigating this volatility can unlock opportunities for investors seeking resilience and potential returns amid the ebb and flow of economic landscapes. And there you have it, the 5 investments that can lead you to financial freedom in 2024. Remember, success in investing requires knowledge, patience, and a willingness to adapt. If you found this video valuable, don't forget to share it with your fellow investors. Subscribe for more financial insights, and until next time, stay financially empowered.